The hidden architecture of capital, how the few access what many never see. Hello, everyone. My name is Tessa, and I'm here to introduce you to our host, Reagan Rodriguez. Reagan is a futurist who teaches stratosphere wealthy legacy families how to become impact investors. Hi, Reagan. How are you?
I am doing better than I deserve. How about yourself, Tessa?
Very good, thank you. And this is a really important topic for us to cover, and actually you get questions about it. So I'm excited to hear more on this.
Yeah. Just want to give kind of an overview here. Let me go ahead and get started here. So I want to take this from more of my personal experiences with medium-term notes, standby letter of credits, bank guarantees, trade programs, and really that whole genre, so that maybe you have a little bit more of a background on me. But before I do that, I'd like to share what my current role is with the foundation, and then from there, I'll get into financial instruments. So I'm fortunate in the fact that I help manage a foundation that is based out of the Puerto Rico area. It's made up of 26 Uber stratosphere wealthy trustees, and the mission statement within this foundation is to create jobs, not just construction jobs, but sustainable jobs. Our program works for some people and others it doesn't. Some people prefer debt financing. Look, we're not a lender. I don't like debt myself. So why would I want to place the burden of my clients of that same burden? So instead, we're equity partners. Our basic criteria, the total project cost has to be at least 100 million euros. So in today's dollars, that would be about 114 million. We will look at a certain portfolio deals if one project does not meet that threshold, but maybe they say, Regan, I have two or three, let's say 30 to $50 million projects, and maybe combined it meets that threshold, then sure, I'll consider that on a portfolio basis. But just so that you're aware, and look, most of my referrals, as you've noticed, Tessa, that have come from the clients that you have met and the projects that you've added to the portfolio section of our website, they're at that 100 or more multitude or multitude on up, right? The second key factor for us is that there has to be some kind of an economic stimulator component to it. In other words, that it is somehow benefiting the economy in some fashion. We feel that that's part of our mission statement, part of our directive. And the third is that it's a job creator. I don't want to confuse the whole EB-5 funding program that I think gets a lot of press nowadays, because that's not what we do. Instead, we look at what are we created on an interim level, on a construction job level, as well as on a permanent level. And whether that is project specific, or maybe it might be something that's a domino effect, because maybe that project has a ripple effect and then it's going to affect others. That will also be taken into consideration. There are no fast or hard numbers that we had to adhere to that. So again, I look at things more on a macro level. The three areas where we target our money for is number one is for energy projects, number two for infrastructure, and number three for humanitarian projects. Although the foundation in the past has funded more internationally, as you very well know, Tessa, most of what we funded has been in the continent of Africa or maybe other underdeveloped countries. Yet this next year, coming into 2026, we will be purposely increasing efforts to deploy capital inside the United States with the right partners, with the right project, because we view that it might be a little bit more of a safer haven for our dollars. The foundation is not about wealth creation, but rather wealth preservation. What else can I tell you? We're not return driven, we're not IRR driven, but I will say this, we do play very well with our toys, right? So I mean, I'm not saying that we want to get into a venture where we're never going to make a profit. I didn't say that. What I am saying is that we're not that typical private equity or venture capital firm where it's a 5 to 10 year horizon, and then we're going to put a gun to your head and say, hey, time's up. Give us our money back. No, we take a much longer approach. We are prepared to take a much longer view on that if necessary. And we rely on our partners to operate the project properly. We will fund 100% of all of the project costs if it's maybe land that you currently own and that's going to be contributed into the venture. And if that happens, then there will be a mechanism where your dollars are returned to you. It may not be $1, month one. It might be over a 3 or a 6 year timeline. So we'll maybe set that up at the very beginning, whether it is that 2 or a 4 year or whatever that timeline is for that project and whatever the anticipated capital needs might be. And I'm going to use very broad general numbers just as a way of illustration. If a project is 240 million and it's projected to be maybe let's say 2 year development or a build out, and then the simple math would be that's 120 million a year. So we're going to look at that rather than looking at a draw schedule. We're going to look at a funding schedule. So we're going to arrange ahead of time. Again, in very general terms, we might say year one, 120 million. We will then just set up and automatically fund into an account that you've set up that we've approved at 10 million monthly. And then it would just flow. And then we will rely on you to manage that capital properly, because on the front end, it may require you to structure that deal. If it's a land takedown of maybe letting the seller know, hey, I'm going to be paying you over a 2 or a 6 or maybe an 8 month period, as opposed to a lump sum. Or it might be the converse of that, whereby you know that your pre-development or early stage development cost in no way, shape, or form are going to have expenditures or expense needs of 10 million a month. That's totally okay. All right. You would just be, in effect, stockpiling that for when the day comes in. As most development deals, ultimately, it's kind of a bell curve kind of example where you'd be prepared to handle those expenses and or needs as you'd be required to, right? Let's see, what else can I say? Depending on the profile or the risk of the nature of the deal, our equity, and again, this is a range, as you know, Tessa, I prefer to err on the side of caution. The equity position that we take from the foundation side on the low end is 20%, and that's on the low end. Sometimes it could be 40 on certain infrastructure projects, but on humanitarian projects, it's 20%. And our piece can go, as I said, as high as 40. I used to say it has yet to do that, although I can't say that anymore because it has. It's only been 2 projects, and those 2 were those road construction projects that we did last year. If you recall, Tessa, it was with Samuel. Actually, I think it was last November. And then Cuthbert for more expansion on road construction in Uganda. That was in December of last year. So although it's not typical, I want to give you a broader range versus something tighter in the odd event that something were to develop and it pushes that envelope. As you know, I like to manage expectations best I can. I'll put it that way. So that's our program. That's it. Some people like it and think it makes a lot of sense. Others say, hey, thanks, but no thanks. I have $100 million line of credit at Barclays or Credit Suisse, and Or they might say, I have conventional funding, resources. Hey, look, we don't care, right? I don't view it one way or the other. Number one, we're prohibited by the foundation to solicit or induce clients to work with us. Somebody has to be invited to the dance, so to speak. Let me also point out that with the foundation's capital, there is no interest rate. There is no preferred return. We are straight up equity partners. We do not believe in debt. We do not like debt. We want our partners to be focused on the job in hand and not perhaps making poor decisions because of the debt that's hanging over their head or that banker or some other movement in the market, whereby we view that as all things being equal. If you could make a decision, what would really the right decision be? And it might be that even though the market's turned down, we should be spending a little bit more money on this because it's going to prepare us for when we come out, and then we'll be ahead of everybody. And maybe we'll be able to acquire this. Or, no, wait, maybe we should pull back. Let's be smart about it. Turn the lights off for a little bit while we ride out the storm. Whatever the decision is, we do allow our partners, starting in the 5th year, it's an absolute right to our partner. They don't have to seek our approval, but they can pay the money back. They can sell. So if somebody knocks on your door and asks you if you've thought of an exit strategy and you want to take advantage of that and get a large windfall, then you can return the money. No harm, no foul. And that's an ongoing right every 2 years after the 5th year. So in a smart city or in a master plan community, the capital is going to be flowing through. We just need to work on a structure on how we'd warehouse some of that for the eventual exit. That's, again, more of a structuring or a papering issue than anything else. Okay, we're actually looking right now at a similar situation where the majority of the revenue of the project is really made for membership in land or home sales. It's not like we're building a hotel or we're building some big multi-unit apartment building that at the end of the day, it's there, you could touch it and someone's going to pay you for that specific asset that's identified. In a smart city, we're kind of selling along the way. Last thing I'll say is that, like everybody, everyone else, we like to manage our time. We like to manage our resources, just like you. And I found out that if I looked at every deal that was presented to us, then potentially we'd be chasing our tails. And at the end of the day, we'd find out that who we thought we were dealing with maybe really wasn't in it for the long term. So right, wrong, or indifferent, we have a little bit of a procedure whereby we do have a pretty intense qualifying and due diligence process. So let me close with this. Okay, here's something to good close with. I'll close by telling you everything I just told you, but in a slightly different way. Do you know what you don't know? A wise man is someone who knows, and he knows he knows. A man who will be wise is someone who doesn't know, and he knows that he doesn't know. A fool is someone who doesn't know, and he doesn't know that he doesn't know. So, do you know what you don't know?
I love that. Well, and I love 2 things I just want to say about Reagan, and having worked with Reagan for a long time, now 2 years, I think it's been already. Reagan's passion for the humanitarian or sustainable projects is so apparent in everything he does, and in the organizations that he's partnered with and all of the resources. Just very much thankful for what you do and contribute back to our communities and the world at large, because it's all over the world, not just here in our backyard. And also the conservative approach that you take. I really do think that, if you ask a lot of people, they'll take a very aggressive approach, or they want to make the most money. And I love that you're focusing in on the long term and really the benefits, that it's good for everyone, not just for your pocket, right? And that's very different to find in the financial world. So I just thank you, Reagan, for being that transparent and upfront with everyone. And if you do want to find out more, obviously we have links in this show and on the page as well. But really, it is invitation only. So, connecting with Reagan, you can go to the website to 5thaavc.com and connect. Just hit contact us and you'll get directly to Reagan. You can find out more. But it's invitation only. And all of the things, including our Fifth Avenue Underground Club, they require an invitation. So make sure that you connect with Reagan. Do hit the bell to get notifications when we go live. And thank you, Reagan, for everything that you do.
Yeah, I just wanted to mention last point. As I say, I do the best that I can to kind of manage the expectations of what that equity piece. And I was just remembering, just like you said, I have a good relationship with my clients, and with those two that were the infrastructure projects, I had quoted them originally 20. Then everything, even when terms came out, it said that. Then when Donna, our analyst, was going over the numbers and we were realizing it's an equity piece, it's not as if he's going to have to make payments right away. She said, Regan, do you get that even if everything works out it would take 40 years if we did it based on the net every year to do a percentage. We may have to do 40. And I thought, oh. And both of them were understanding about that. They're like, well, no, who wants to wait 40 years? How do we even know if we're going to be around for 40 years? And I said, how do I even know if this world will still be in existence in 40 years? I mean, so yeah, thank you for that part. And the people that it has had to go a little bit higher, it's only been 2 instances, and both of them were very understanding on it. So that's it. We're done.
I appreciate that about you. So thank you very much, Regan, and we'll see you all next time.